Apparently, a lot of you out there are interested in leveraged ETFs, myself included. It is one of the most discussed topics on this channel. Since I started this channel, I've been asked a lot of questions in the comments. Also, a bunch of you have shared your perspective on these. Let's bring all of this together. What's happening, everyone? Welcome to Think Finance. Hope everyone is safe out there. My name is Raj, and on this channel, I talk about personal finance, investment ideas, money management tips, and everything that impacts our money. If you're following Think Finance, you know I am pretty passionate about leveraged ETFs. They make a big part of my long-term portfolio. Unlike all the opinions and information you might have read or heard, I believe there is a solid case for holding these for the long term. In this video, I'll focus on leverage ETFs, try and answer questions you guys have asked the most in the comments. Answers are based on information I have, my experience with leveraged ETFs, and information shared by you guys in the comments. Before going any further, a big warning. Leverage ETFs are not for everyone. If you don't know what you're doing, it will break your portfolio and has the potential to incur massive losses. I strongly recommend not putting any money in leverage ETFs if you are a new investor. I have a number of videos discussing how these work and how I use it as part of my portfolio. Link to the playlist will be on the screen. Again, can't stress enough, these are risk heavy and not for everyone. With that said, let's get into Q&A. This is the most asked question, and it makes sense. Logic says if market drops 33% in a day, leverage ETFs should hit to zero since they are 3x. So 33 times 3 is almost a 100% drop. A similar question is posted on Direxion's website. By the way, Direxion and ProShares are major issuers of leveraged ETFs. Direxion's position, and which I agree, is we are talking about a scenario which is rare to say the least. Indeed, personally, I believe they are right and something like this will never happen, especially the regulation and circuit breakers that the exchange has put in place. Direxion also talks about putting a cap at 75% if needed to protect the interest of the investors, meaning if the rare never to happen scenario does occur, the ETF will drop no more than 75% a day. One other thing to note, and I've seen this with inverse ETFs like SQQQ, which is the inverse to TQQQ, where the ETF price will drop super low and the issuer ends up reverse splitting it, meaning boosts the ETF price by decreasing the number of outstanding ETF units. In summary, I would not worry about something that is practically not going to happen. Market is not going to drop 33% in a day. But if you are going to lose your sleep over it, then maybe you should just avoid these for now. ETFs by design are considered efficient when it comes to taxes. Indeed, this is one of the major reasons for the surge in popularity compared to other forms of investment. With leverage ETFs, things are different. It's important to understand how these are structured. Leverage ETFs manage assets via swaps and future contracts. To achieve the desired outcome, the ETFs go through a reset on a daily basis, meaning making adjustments to some of the derivatives these ETFs hold, which could involve selling. And for that reason, it is my understanding that this will always be treated and taxed as short-term gain. I have struggled to find a clear answer around this question, but if you connect the dots together, it's safe to assume that any capital gains will be taxed as short-term gains irrespective of the holding period, mostly because of the daily reset. This is a fun one. You read and hear about this on every other website, blog, or video out there. Leverage ETFs are volatile and employ derivatives like options, forward contracts, swaps, and futures, which require adjustments on a daily basis. And this is a major reason for decay or loss in value over time. Now, I won't talk about every leverage ETF out there, but we'll focus on the ones that I invest in: TQQQ, TECL, SOXL, UDOW, and UPRO. I fail to see any impact of the so-called decay or loss in value. I've done at least 2 videos backed with actual data to prove my point. Decay is hyped and creates unnecessary fear in investors' mind. Take a look at my other videos for more detail, but let's just quickly take an example and summarize this. Let's say you invest $100 in QQQs and TQQQs, and a market moved down 5% and next day it moved up 5%. You will end up losing more by investing in TQQQ versus QQQs. This is not magic, this is just math and how percentages work. These are designed to move big in either direction. I've analyzed these when markets dropped big in March 2020 and December 2018. I failed to find any surprises. They behaved as they should have. These ETFs are designed to amplify gains and losses. So far, all the decay talks, to be honest, is all noise, which I have decided to ignore. This is just me and my perspective. Again, take a look at my other videos for more in-depth analysis. If you ask this question to Direxion or any other company that offers leverage ETFs, or your financial advisor, they will never recommend these for buy and hold strategy. Direxion caveats this by saying that it might be appropriate depending on your risk tolerance. Here is my take on this. If you are a new investor, do not, and I repeat, do not buy leverage ETFs, period. One really needs to have a heart of steel to put money in leverage ETFs, mostly because how volatile these are. This year alone, TQQQ was at $32 in March and $175 in August, a whopping 400% variance. They move big. While it feels great when these are rising, most investors will flee when they drop big and will end up with registering huge losses. So, if you are a new investor, don't invest just yet. Take time to understand how these work, moves they make, and try and understand your risk appetite. This will help you build your own investments and trading strategies around leverage ETFs. If you've seen major corrections, bear markets, recessions, major market drops, you have seen enough. I fall in this category. I have 35% of my portfolio in leveraged ETFs. I have my own strategies to invest and trade these. So, as an experienced investor and someone with a heart of steel, leverage ETFs might be a good tool to move the needle in your portfolio. Of course, like with all investment tools, investors or traders can use these a number of different ways. For example, you can use 3x inverse ETFs as a hedge for your long-term portfolio, or use options and apply various strategies to your benefit. I'll talk about how I use these ETFs as a long-term investor. I'm also a major TQQQ options trader. Check out this video if you want to know how I trade options, and maybe I'll do another video around this topic. Like I shared before, I have 35% invested in leverage ETFs. Watch my other videos for more detail on my overall investment strategy, but here is a quick summary. Number 1, decide your allocation. how much do you want to allocate towards leverage ETFs? For me, it is 35%. It could be 10% for you. Pick a number based on your risk tolerance. Number 2, make sure you always have cash in hand when dealing with leverage ETFs. I target to have at least 15% of my portfolio value in cash. You need cash to buy major drops and corrections. Which brings me to number 3. I believe for this to work, you have to buy the dips and corrections. This will allow you to dollar cost average down. I have defined thresholds to manage this. I will buy more when markets drop 10%, 20%, and 30%. I ended up buying a decent chunk when markets dropped big in March. Given where we are today, it turned out to be a good strategy. Number 4, rebalance as needed. Given how these move, chances are in a bull market, they will be overweight very quickly in your portfolio. For example, at the end of August, leverage ETFs jumped to 52% in my portfolio, given the parabolic move we saw in tech. You have to put in some discipline and lock in profits. Remember, it works both ways. You can go south very quickly and wipe off all your unrealized gains like it did in March. So what do? Well, you rebalance. I rebalance every time these hit 50% allocation in my portfolio and bring it down to 35%. Pick your number and rebalance. This is my strategy and it works for me. A while back, I did a video when I received an email from my broker that leverage ETFs may be regulated. Check this video out for more detail, but here is a quick summary. There is a proposal out there to put some due diligence around investing in leverage ETFs. You as an investor will be required to meet certain prerequisites before you can invest in leverage ETFs. It is still a proposal which is being considered. I have not heard anything new around this. If you have heard something, please do share in the comments. As it stands today, you can buy and sell these via your broker, with the exception of a few that have decided not to allow investing in leverage ETFs. For example, you cannot invest in these on Vanguard platform. More in this video. These are the ones I invest in as part of my long-term portfolio. I did a separate video discussing the best leverage ETFs to consider. Link will be on the screen. Personally, I prefer to put money in ETFs that track the overall index or a specific sector. For example, TQQQ track NASDAQ 100, UPRO track S&P 500, and SOXL track the semis. The companies behind these are solid, and that's what you want. I avoid ETFs that track commodities, for example, crude oil. It is such a volatile space to start with, and then you throw in the leverage piece in the mix. Too much to manage, at least for me. Okay, what did I miss? Drop some questions below and let's try and answer and help each other. By the way, do read the comments under my leverage ETF videos. There's some good research done by Glory Days and a good article shared by Arthur and a bunch of other information and conversations that is super useful. That's it, guys. Smash that like button and subscribe if this was helpful. Until next time, peace.